We've started investing already. We're about over 60% invested. And without a doubt, these are very, very interesting times to invest. As a private equity fund of funds, we exclusively just invest in private companies. And this cycle, we are looking, given the current environment, just roughly doing about half or more in China, about a third or more in Japan and Korea, with the remainder predominantly in India.
Half or more in China. Now, this is interesting, and this is PE, private equity, we're talking about, whereas for public market investors, a lot of people are still wondering whether China is, even at these levels, worth the risk and investable.
Yes, absolutely. I think this is where you've really seen a bifurcation of the public and private markets, not only during COVID, but the recent market volatility, where the long-term 10-year nature of these funds really allows you to ride these waves of volatility. If we look at maybe the last 2 or 3 decades, Martin, these funds have, in my mind at least, generated a significant outperformance for the illiquidity premium, anywhere from 15% or more, right, relative to their public market equivalents, as well as allowing people to take advantage, right, of their true growth. So, for example, where we really focus our efforts are on the venture, technology, new economies, on the growth side, and given the current environment, really focus on domestic companies, which tend to be a little bit more shielded from some of the macro U.S. China tensions, export issues, and domestically, especially those sectors that are aligned, right, with the national and social interest, right? These are ones that have long-term growth trends.
Yeah, I was going to ask you about that. It must be pretty treacherous, right, as a PE investor going into China, into startups as well. I mean, you mentioned focusing on domestic companies. I get that. But anytime you're talking tech and startup in China, I mean, you literally need a crystal ball. And nobody's got one of those, right, to figure out in terms of the regulatory environment, what they're going to crack down on, what they're not, what's on, what's off. I mean, social media, celebrities, and fans, I mean, they're cracking down on those now. So, I mean, what's next, and how do you know?
Right. Chris, this is where one of the, I think, nexus, we're at really an inflection point, right? Not only for where China's next modern phase of their communism is going, but what is this going to mean, right, for the socialist economy versus what has been a relatively free market capitalist system. And so what we are seeing and what we're thinking is that the big change is that you no longer can just use an economic lens. Right? That economic value has always been the primary and the sole driver of picking companies and picking investments. And now, in addition to that, you also have to probably look through a social lens.